Alrighty guys, what is going up? Welcome back to the best investing money management channel on YouTube. In today's video, we are going to be talking about the top 3 stocks that I am buying right now. Now, looking at FinVez here, you guys can see, for those of you that don't know what FinVez is, it's just a stock scanner. We're not going to be really talking about this too much. I really want to show you guys a visual of the market, right? We have the 3 major indexes. We have the Dow Jones, the NASDAQ, and the S&P 500. Dow Jones is more value stock. NASDAQ is more tech. S&P 500 is really just the top 500 companies. So you guys can see tech did get hit by far the hardest today. But if we actually scroll down, this is the S&P 500 broken down into sector, and each red represents a stock that sold off today. And the brighter the red is, pretty much the more it sold off, right? So Amazon, you guys can see, sold off 3%. Google, 1.4%. The only sector that really didn't get hit as hard, just by looking at it, is healthcare. We have, three or four companies that are doing decent, up a little bit, but nothing, nothing crazy. But now, Carter, what stocks are you buying and why are you buying them? Well, anytime the general market sells off, that always brings a ton of opportunity to buy stocks on a massive discount. And look, now I'm not going to be buying GameStop even though it sold off 6%. These are more companies that are very, very high risk, high reward. So I wouldn't recommend GameStop, but a company that I am looking at is ticker symbol HD. Now, this is Home Depot. Now, one of the main reasons why I love Home Depot is because it has a beautiful upward trend. It's sold off just a little bit where it's not overvalued nor undervalued. Has some resistance here at around 340. It's on a beautiful upward trend and honestly has been killing it over the past couple of years. It's outperformed the market. You guys get paid a dividend of $1.65 a quarter, so you guys can start compounding your account very, very fast. This is by far one that doesn't carry as much risk and still has so much reward. And I honestly believe Home Depot is by far one of the best undervalued stocks out there this year. Honestly, I think everybody should dabble with Home Depot for sure. Now, the next stock or ETF that I am buying is ticker symbol SPY. Now, anytime the stock market sells off like this, it's always a good idea to buy in and just buy it and average your price, right? Because as an investor, the investment strategy I use is dollar cost averaging. So every week I buy some. Now when it sells off, this just brings good opportunity to buy in on a discount that wouldn't have been there before. And yes, the market could continue to sell off, and all I'm going to do is just keep buying more. You guys can see that anytime it comes down to about a 33 on this chart, we get buying pressure, right? So it came down in here, we had buying pressure. Came down in here, buying pressure. Came down in here, buying pressure. So anytime the S&P 500 or the general market sells off this much, it's always a smart idea to take a little bit of time, buy more, and hold it. Now, the beauty of the S&P 500 is through all the great depressions, recessions, ups and downs in the market, it's had an annual return rate of around 9.8%, which is beautiful because I don't have to worry about it. I don't care where the stock is tomorrow or even a year from now or even 2 or 3 years from now. I care about it, 20, 30, 40 years from now when it's time for retirement. This is just a company or companies that are the top 500, so you can't go wrong with it. The best investment or the best quote I ever heard was 96% of hedge funds can't even beat the S&P 500. Of that 2%, don't beat it the following year. And of the other 2%, you have to have a net worth of over $2 million just to even talk to the guys that manage it. So it's just better to invest in the market, right? Invest in the S&P 500. Don't even look at it. Now, there's also a couple of companies that I am looking at. We are buying some more Tesla. Tesla did sell off about 3.8%. Right on some old resistance, which I think we'll use as some new support. Definitely some room from 726 to at least 787. Hopefully we can get a breakout from there and hit that $900 mark relatively soon. It's still on that short-term upward trend. That's one of the main reasons why I love it. But it's just a solid company, solid investment, and a good, solid growth stock. Yes, it's going to carry a little more risk than the S&P 500. It's going to have a little more swings, but it's also going to have a lot more growth than the S&P 500 would have. Okay, now stock number 3 is the one and only AAPL. right? Apple, stable company, sold off down to 35 on the RSI. We know this is going to get bought up. It's just a matter of time. Everybody knows who Apple is, and they have like $135 billion in cash. They only have about $20 billion in debt, which is virtually nothing for this massive company worth $2.4 trillion. And you get paid a dividend. You get solid growth. It's just an absolute no-brainer investment. Now, another stock or ETF that I am looking at to buy is the one and only VUG. Now, this is Vanguard's growth ETF. It sold off quite a bit today. Just brings what? Opportunity to buy in at a good price. So for me, buying a little bit of this one as well because it's a stable ETF, very, very low expense ratio with phenomenal holdings such as Apple, Amazon, Microsoft, Google, companies that are heavily rated for growth and have grown in the past. This one has historically outperformed the S&P 500, but it does carry a little more risk. So for this is by far the top investments that I would recommend buying right now to double your account. I hope you guys enjoyed it, and overall, I hope you guys got something of value, and we will see you guys later. Remember to stay happy, stay positive, and stay safe out there. Stay safe out there. Take care, everyone.